Hello and welcome to another update video. Today I want to cover orange juice CFDs. This is an analysis of obviously orange juice. It was requested by someone who booked an analysis. If you're interested, you can book the analysis of an asset. It can be a cryptocurrency, can be a stock, can be an index, could be anything really, forex pair, metals, on the website mcoglobal.com. Just click on the shop section and then you can book a technical analysis. And yeah, the person who booked orange juice kindly allowed me to upload it on YouTube. I do refund 25% if I can upload the analysis then on YouTube for everybody's benefit. So this is one of them, in case you're wondering why I'm analyzing orange juice. So this is obviously the orange juice CFD. The chart history isn't massive. We have to start at the all-time low, which is here at 2019. So I've had a look through the different orange juice cash contracts and everything here on TradingView. This seems to be the one with the longest chart history. So it doesn't really give us really the very, very long-term view, making the long-term perspective kind of uncertain. So we need to keep an open mind. Once this initial rally here is over, this could be, I could think of maybe a B wave pullback then, maybe it's going to be some kind of a wave 4 even, but then I don't really have the long-term history. So we need to keep an open mind there. But at the moment, the rally to the upside is likely not over. This rally started in 2019, but really gained traction in 2021. So what we're dealing with here is, in my interpretation, a large ABC structure. Yeah, why? So I have in the beginning a corrective move up, which is the A wave, a corrective move down, which is B wave either here or here, and then the C wave to the upside. And that gives it a 3-wave look. So for me, the initial rally is an ABC structure in wave A. Then we had a B wave pullback. And this C wave is now on the move, is now moving. And I consider this move up an impulse. Okay, so it makes sense that some kind of a B wave finished here. And the C wave is an impulse, even though it's very extended. We'll talk about a possible alternative wave count as well in a minute, but this is sort of my primary view. Again, it's not about getting necessarily the perfect wave count. It's all about getting the wave count that works, that gives us an idea of the structure, that gives an idea of the trend, what are the support levels, what are resistances, what are possible next targets, when does support break, when do we have to change our wave count expectation and structure and perspective. So the idea is that the initial rally here, from the 2021 low to the 2022 high, that this was a 5-wave move in what I would consider, and I zoom in a little bit, a leading expanding diagonal in that C wave. A leading diagonal is characterized by this kind of wedge shape. Sometimes they move in a channel, but this looks like this wedge shape. And it's obviously a 5-wave move. So we had here small 1, 2, 3, 4, 5. Then a corrective pullback, A, B, C in wave 2. And this third wave then moved also in 5 waves. My interpretation is that we had here a 1, a 2, a 3, a 4, and you see also the wave 5 has nice 5 waves. That was the main bit of the rally, the third of a third wave. And orange juice CFDs gained here 190%, nearly 200% in that, just in that third of a third wave rally. No, sorry, it was not the third of a third of a C wave. Now it looks as if we have started possibly an ending diagonal in wave 5 of C. So let's take a look at the microstructure. This is where it gets a bit ambiguous now. Let's go to the 4-hour chart. The thing is, this here looks really like a triangle. Yeah. So this is where it's getting a bit ambiguous. Interpretation is currently that the 4th wave of that 5-wave C wave finished here on what is that, 16, no, well, in January 24, right? Bottomed here around $288, $289, now let's call it $290. This is the red line. I mean, this needs to hold really for upside trend continuation. That's the absolute key level. Then we could say, okay, wave 1 to the upside possibly, wave 2 pullback, okay, and then maybe we have here 3 waves up in wave 3. Okay, because this is an ending diagonal then. The problem is I consider wave 1 as possibly actually an impulse. So that doesn't really fit the idea of an ending diagonal. But let's talk about this first. In this scenario, the wave count would be, yeah, wave 1, wave 2. Again, this would have to be an ABC structure, not entirely sure about that. Then it would be A wave, B wave triangle possibly in wave, because if it's an ending diagonal, we have an A wave here, B wave triangle, C wave up. Let me change the wave degree. Yeah, and then we should now be in a wave 4, and maybe we just get one more high in wave 5. So important now to understand, okay, what is the support for wave 4? And I don't have a very clear micro count of this, so I consider the lowest point as key level. Based on that, I measure support, and if it's the diagonal, the wave 4 needs to hold 395. And then one more high in wave 5, which should also be an ABC structure. And that could complete wave 5 of C. That would also be possibly the top of that trend channel. I've got 2 trend channels here, yeah, the solid lines and the dotted ones, so pay attention to both. But then it's now important to understand, okay, what could actually be a target of the bigger picture. To measure that, we take the length of waves 1 to 3, and we go to the low of the wave 4, which is the January low, and we're looking for 2 levels normally when we measure it like that. I'm looking for the 38.2 extension, that's at 480, and the 61.8 extension. So the 480 level was already reached. Technically speaking, you could say we have enough waves to the upside to complete this entire rally. Be on high alert that we could break down. But the microstructure of the move up looks kind of incomplete, so I'd prefer at least one more for 5 pattern. And the next upside target is 655. That's far away. So is there another way maybe of measuring? Well, we can also measure just the length of the wave 1 and go to the low of the wave 4, but then we're not looking for the 61.8 extension. No, we're actually looking for the 100% extension. Now, funny enough, that also points to 480. Okay, so it could be really the top is in, but also extensions are possible. So if there is another high, which the micro count suggests, these are the next upside extensions. And there is the next really Fibonacci confluence around 650. But 540 and 580 are the next levels to watch to the upside. So that means I would prefer at least one more high to 540 for 580 or maybe even 650. I don't really like the microstructure, however. One reason is as well that if I take the Fib extensions, this here is too short for a third wave. So I've got one other idea, which is, and I will change the color in a minute, 1, 2. Wave 3 is actually still unfolding, 4, 5. And then we'll just change to yellow here. That basically wave 3 never finished. And that could really drive us up to 650. And I think the yellow count that I just added looks better because we can say 1, 2, and then this is just the A wave up. This is a B wave pullback. So A wave up of 3, B wave pullback of 3, and then we get a C wave rally of 3. Now, because this is then a B wave pullback, we have to consider that it might go down a bit deeper. So I'm going to add the 78.6 retracement. So you've got these levels to watch: 431, 412, 395. In the white count, ideally it doesn't even break below 412. Well, if it does, it could be more likely the yellow count, which however also shouldn't really break below 371. If it does that, then maybe something different is going on. Okay, then maybe something different is going on. Then there would be only one more bullish option that I could see, which is that all of this is an A, B, C structure in wave 1. And then we get a deeper wave 2 pullback. And as long as it's then holding above the January high, it has one more chance and it would do this 3, 4, 5. It's just a different way of subdividing. That's also likely. So actually, looking at it, I would prefer the yellow count, then the orange one, and to be honest, the white count, I mean the white micro count here, I'm talking about the white micro count, is probably the least likely one. It just doesn't have the right look. So yellow means, in summary, wave 1, wave 2, then A, B, C in wave 3, 4, 5. Or the orange count, very similar, just allows for a deeper pullback and all of this counts as wave 1. Then we do a wave 2, which would be an ABC. Then we get a wave 3 as an ABC, wave 4 and wave 5. I like that as well. And both could send us to 650. Just be aware, for the orange count, oh, did I change the color? For the orange count, the last reliable support is at 325. But the invalidation point, which is different, is down here, the January low at 288. So hopefully that helps. That tells us what is happening here. Yeah. Which means below 371, be on the side of caution. A long-term top could be in. Below 325, it's most likely in. Below 288, it would be confirmed. But you see, we also have this trend channel here. So in any pullback, ideally, we're holding within the trend channel. Looking at the bigger, so that gives you targets. And then, you know, as soon as this count is finished, possibly to 650, at some point there, we will need to revisit it, but possible that this B wave pullback starts then. I mean, there's something different possible here. I mean, this makes most sense to me. The only other count I would have is to say that maybe this is some kind of a large 1, 3 waves in wave 1. This is a wave 2. But then the question is, how would this subdivide here? And basically 1, 2, then maybe A, B, C in wave 3, but it gives me a very similar count. 4, 5 is the same thing, isn't it? Yeah, I think we're doing quite well with this wave count. I think that makes most sense to me. Yeah. And we just have to see how deep the pullback is then going to be once this larger A wave has topped. So yeah. And in terms of then long-term targets, won't be able to do that until we have an idea where this B wave might land. But this is already, I mean, this could take a while here to get there. I mean, how long was this move from 2019? That's already taken a while. I can tell you that the main element of this rally is likely done. That was the third wave. It's not going to get easier here because from the January low this year, even though it's still going up, it starts to get very choppy. And I consider this an ending diagonal. So we get a lot of overlaps. You get a lot of unexpected pullbacks along the way. And it's not going to get easier. And in the fifth wave is typically where bearish divergences, you know, start to appear. And they prepare us for a possible top. But it still looks incomplete to the upside. So hopefully that helps. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out the Stocks and S&P 500 service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.